Good day. This is HJT Views on Current Affairs. Today, we will be discussing on the topic of corporatization and privatization of PSUs. We are all aware that for a long time, we have been reading about the public issue of LIC of India. Today, the latest is that the government is going to reduce the size of the public issue because the pricing due to the Ukraine-Russia war, etc., is getting impacted. The question that I have always had in my mind is, what is going to be the advantage of a 5% issue of LIC of India? Is it only to fill in the coffers of the government of India, which currently are facing a lot of pressure thanks to pandemic, thanks to the Russia-Ukraine war, thanks to inflation? Is that the objective? Or is that the objective something more? And what is it that I mean by more? Is the objective that government units must start performing under certain compliance regime, which is not ministry dominated, but which is dominated by the influence of the capital markets, the influence of the financial institutions, the influence of, say, minority shareholdings? What is it that one is really trying to achieve through the LIC of India public issue? If the intent is only to get money into the kitty, it's an intent that is a big failure. It's not going to help anything. However, if the intent is to corporatize LIC of India, make them face the requirements of disclosures and compliances that a listed entity has to go through, and make their book sets in line with the norms that are prevalent for other insurance entities in India, I think it is an excellent opportunity. That is why I very much liked the statement of Mr. Anil Agarwal, the head honcho of Vedanta Group, that instead of focusing on the privatization, the government of India should first focus on corporatization. I think it is a very significant statement that Mr. Agarwal has made. We are all well aware of what happened with UTI, which was established by a separate act of parliament. We don't have to repeat it over here, but UTI got mismanaged, and the people of India, middle class investors, got taken for a ride. We all know that it's 22 years now since that event occurred, and many have forgotten. But Atal Bihari Vajpayee lost his elections because of the UTI mismanagement. One of the key reasons for that to happen, for him to lose, was the UTI fiasco, when US 64 unit holders were always told that your investment is safe, There are hidden reserves, etc. And finally, we came to the stage where even giving par value of the units, forget any premium, became difficult. Of course, UTI got split, a separate mutual fund got created, a separate specified undertakings unit got created, the fixed term close ended schemes finally got diluted, etc. etc. But UTI was a classic example of how not to corporatize. Corporatization by force is always a failure. We now are in the situation of the LIC of India public issue, and looking at the issue purely from a money point of view and saying that about 5% of the shares are going to be offered to the public is a humbug argument. But if you LIC of India, sorry, not UTI, if LIC of India is going to be subjected to the norms of disclosures that listed entities have to do, the accounting policies that they need to follow, the public disclosures of income, the meetings with analysts, etc. I think it's a very good thing that is happening for the Indian capital market. It will bring in more transparency, it will bring in more questioning, it will bring in more interrogation. But most important question that I do not have the answer for is, are LIC's senior executives ready for going through this process of being a listed entity? That's a question that I suppose will be answered only over a period of time. The second question to be answered is the government of India willing to take a step back and not treat LIC of India as its child because it's still holding 95% to fund its failed privatization program? If it continues to use LIC of India with the objective of fulfilling the money needs that privatization of other PSUs has failed, it's not serving the purpose. The real important decision that the government of India has to take is that all public sector units and all public sector banks that require additional capital either to fund their losses or for the purpose of their business must go now through the capital markets. Let them value their shares. Let them sit down and value their businesses. Let them come up with the capital requirements that they require and let them issue the shares in the capital market. That is one way of really knowing whether they are competent to take the pressure of disclosures and compliances. That this ends my talk of today. I hope you like it. If you do, please share it. Till we meet again, have a great day. Bye. Jai Hind, Jai Maharashtra, Jai Mumbai. Bye.